Please welcome Terry Ryder.
Thanks, Tim. Welcome, everybody. Those of us who work in the real estate space 12 months ago, we were drowning in negativity. There was an election looming, which is always a handbrake on decision making. There was a Banking Royal Commission, lots of negativity around that. Prices were falling quite strongly, rapidly in the two biggest cities, and media was supremely negative. But 12 months later, it's like chalk and cheese. Suddenly, there's a whole new world. We start this year with a much higher level of optimism. This confidence has returned to the real estate landscape. And we're seeing just a whole new climate pervading the whole real estate scene. As I like to term it, sentiment's been turned downside up, and if you talk to the average economist, why are things pumping so much in real estate, they tend to see everything through the interest rate prism. They talk about record low interest rates, and I think things are a lot more complex than that. I think really it started with the election result. Elections are always a huge handbrake on decision making. Everything stops in real estate markets around the country when a federal election is in the offing, particularly one where it appeared the likely winner was going to have some unhelpful policies for real estate. So probably the single biggest thing that's happened that's helped real estate was the middle of May when that federal election result was decided. We got that out of the way, and then a series of fortunate events followed from there. The very week following the federal election, APRA announced its changes, making it much easier to get finance. The interest rate cuts that followed made it much cheaper to get finance. Help for first home buyers was announced, and that's now an active part in the market, and tax cuts were also legislated. So just a rollout of a series of very, very fortunate events that have helped real estate, and the combination of that is we have the much better climate for real estate that we see today. The help for real estate, first home buyers clicked in on 1st of January. That's a big factor, because whereas the previous manifestation of the property boom that we saw primarily in Sydney and Melbourne up until about 2018 was very much driven by property investors, the new uplift we're seeing in real estate markets around Australia is not so much driven by investors. It's very much about owner-occupiers, and first home buyers are now more active than at any time in the last 10 years. So that help to first home buyers has actually been a very, very big factor. And suddenly, everyone's a lot more bullish about real estate. Media, which is terribly influential on the mindset of people considering real estate investment, is now writing a lot more positive stories, and there's been a rollout of a series of very, very bullish predictions for 2020 from credible forecasters. And it's starting to manifest in very, very positive results. Just yesterday, CoreLogic published its price report, as they do at the end of every month or the beginning of every month, talking about the previous month. And we saw something in the figures that were published yesterday, with particularly when you look at the latest quarter, the quarterly growth figures for real estate house prices in all the markets across the country. We haven't seen this for more than 5 years. Every single major market in Australia had growth in the last 3 months. All 8 capital cities and all 7 of the state and territory regional markets were up in the latest quarter. Now, over the last 5 years, while Sydney and Melbourne have been pumping, markets like Perth and Darwin have been going backwards. Many regional markets have been struggling. So we haven't actually seen that any time in the last 5 or 6 years, where absolutely everywhere has produced growth. It's a whole new ball game in real estate, and it's all underpinned by the factors I just talked about a moment ago. The federal election result, the APRA changes, the interest rate cuts, the tax cuts, and the help for first home buyers, and a much more positive media means that everybody who operates in the real estate space now is finding just how different it is, how much more positive it is, and people are actually out there making decisions. We also have a situation where Australia is fundamentally in a shortage situation, and this is something that's going to continue to drive prices, to put pressure on prices right throughout 2020 and into next year as well. Sydney and Darwin both have vacancy rates a little above 3%, but everywhere else vacancies are very, very low. Most of our capital cities are now below 2.5%, and 3 of them are below 1.5%. Those are very, very tight markets. And it's a very important factor to be aware of as property investors. Most investors, unfortunately, are kind of media driven. They pile into real estate markets when they read that there's a boom on. And of course, when you're doing that, you're buying at the wrong time. You miss the best time to buy. You want to be buying ahead of that publicity. You want to be buying before the boom happens. So what you're looking for is forward indicators, things that tell you about areas that are going to do that before it happens. And one of the best forward indicators of all in real estate are vacancy rates and what that precipitates, which is rental growth. Before Sydney got on its boom path about 2013 or 2014, it had 2 years in which prices didn't rise, but rents did a lot. And smart people realised that that was the time to start buying in Sydney because vacancies were low, rents were rising, but prices hadn't done anything yet. That's when they started buying in Sydney, and what followed was 5 to 6 years of really, really strong growth. So this is a very, very important factor for real estate markets across Australia right now, the fact that vacancies are so low, and because building levels have dropped off so much, we had 2 to 3 years of really strong construction, particularly apartments, but then that stopped. And it takes time for the industry to crank up again. We're not going to get back to those high levels of construction of new dwellings in Australia anytime in the next couple of years. So we're stuck in the situation of shortage, and that's going to put continuing pressure on property prices. One of the key factors to be aware of as property investors looking for markers of future growth is the level of infrastructure spending. It's the single most important word, I think, in real estate research. It's something that we look for. Good current infrastructure in a location, but in particular, spending on new infrastructure. Why did Sydney and Melbourne boom, but Brisbane didn't, Adelaide didn't, Canberra didn't, Perth and Darwin were going backwards while Sydney and Melbourne were going forward so rapidly? Why is that? Well, I think it all comes down to what's happening in local economies, and one of the great drivers that made the Sydney and Melbourne economies exceptional at a time when nationally the economy's been a little bit beige, a little bit lukewarm, not going so well, which is why we have such low interest rates. It was the infrastructure spend. Both Sydney and Melbourne have been spending tens of billions of dollars on new infrastructure, motorways, tunnels, new rail links, hospitals and schools. Not only is that great for the amenity of a city, but it generates enormous economic activity. From that comes jobs, and those jobs generate demand for real estate. So really that's been the single biggest factor, I believe, in driving those booms in Sydney and Melbourne. Hobart more recently got on board with what I would call a mini boom, and Hobart in Tasmania used to be the basket case economy of Australia, but around 2014 a new government came in and proactively started to generate that economy, and it rose up the rankings from 8th and last to where it now currently ranks as the 3rd strongest economy in the country according to the CommSec State of the States report. And a lot of that was built on infrastructure spending, so it's very much a factor to be aware of. And when you're considering locations that you might invest your money around Australia, be very aware of that factor. If infrastructure spending is strong, the local economy will be strong, the population will be growing, jobs are being created, and the real estate market inevitably will respond to that. And that brings us to the prime subject tonight, which is the Sunshine Coast in Queensland. 3 times a year we publish this report on the Hotspotting website, National Top 10 Best Buys report, and we've just published the new 2020 edition. And we have our top 10 picks around the country, the places we think are the best places to buy this year for future growth, taking a medium to long-term view. And we rank them from 1 to 10 in terms of how we think they're going to perform for the people who buy there. And currently we rank the Sunshine Coast number 1 of all places you can buy in Australia. And I'd like to show you briefly why we rank it so highly. It's a place that's undergoing an economic evolution, or perhaps more correctly, a revolution. It's transforming from a quiet, perhaps tourism town, to a much more well-rounded and stronger city, and it's happening through infrastructure spending. That infrastructure spending is not only creating great economic activity and jobs, but it's actually creating new industries on the Sunshine Coast. And it's transforming, I think it's not an exaggeration to say it used to be a sleepy tourism town, and it's now becoming not just a strong Australian city, but an international city. The medical precinct, which is a work in progress, it's probably what the final look of it, it's half done. We've already got a $2 billion university hospital there, a private hospital has been built next to it, other specialist medical facilities have sprung up around it, and also a hotel's been built there. Still a work in progress. When it's finished, it'll be a $5 billion international standard medical precinct. And that's created a whole new industry that the Sunshine Coast didn't have before. And it's brought new people into the Sunshine Coast to work in those facilities. A lot of them are very highly paid people, and that's had an inevitable impact on the real estate market on the Sunshine Coast, because these people are looking for good places to live. You saw in the video earlier the concept of building a CBD on the Sunshine Coast from the ground up. The Sunshine Coast kind of evolved as a tourism coastal resort, and it has lacked a commercial hub where they decided they're going to build one from the ground up, and that's not happening anywhere else in Australia, not in a capital city, not in a regional centre. This is very much a first in Australia that they've got 53 hectares that used to be a golf course in the middle of Maroochydore, and they're building it from the ground up, and the first two buildings are now under construction. Ultimately we'll have office buildings, convention centre, hotels, apartments, and there'll also be a station on the planned Sunshine Coast light rail service, which will have a terminus there. I think this is very, very important, and one of the reasons why I think we can justify the claim that the Sunshine Coast is becoming an international city. They're currently spending $400 million on the airport, and when they're finished later this year, it will be an international airport with direct flights from Asia and parts of the Pacific. And this thing, which I think is a remarkable thing, pretty soon the Sunshine Coast is going to have the fastest and strongest internet connections to Asia from anywhere on the east coast of Australia. The Sunshine Coast International Broadband Network, it's a subsea cable. I don't know how they do it, but they're doing it. And you can see from the visual on the screen that it's going to hook into existing networks around Guam, and it's going to have the fastest data link to Asia, to places like Hong Kong, China, Japan, and also off to Hawaii and Los Angeles. And this is a huge factor for the Sunshine Coast, because data speed is very important to a lot of businesses, and a lot of businesses, when they know this, are going to want to have a presence on the Sunshine Coast. And we're starting to see some businesses actually moving their national headquarters to the Sunshine Coast. UE Insurance, I'm sure you're familiar with their ads on television every night. They've moved their national headquarters to the Sunshine Coast. Lots of money's been invested in real estate as well. The Sunshine Plaza was the biggest shopping centre on the Sunshine Coast. They just finished expanding it to make it even larger, spending $440 million. Very typical of the level of investment from national and international entities into the Sunshine Coast because of the growth that's happening there. And you add it all up, it's over $20 billion worth of investment in new infrastructure on the Sunshine Coast, which has been recently completed or is under construction or is soon to start. And that means the Sunshine Coast is actually outspending many of our capital cities on infrastructure. It's bigger than Canberra, bigger than Darwin, bigger than Hobart, challenging Adelaide. It's absolutely massive amount of investment for a regional centre of this size. And it's very, very innovative. I think one of the factors to also look for as an investor, looking for good places to invest, is what's the local council like? Are they proactive? Are they ambitious? Well, one of the main reasons why so much of this is happening on the Sunshine Coast is because the Sunshine Coast Regional Council is so ambitious and so proactive. They've got a very strong and proactive Mayor, Mark Jamieson, who's gone out and chased these things. The subsea cable is something they went out and grabbed for themselves. It wasn't given to them. Nobody donated it. They went out and chased it and got it. And Bernard Salt, some of you may read his columns in The Australian. He's an author of many books, regarded as Australia's leading expert on demographics. He's called the Sunshine Coast recently the entrepreneurship capital of Australia. And just to reinforce that, there's this global organisation called the Intelligent Community Forum, and every year they award somewhere in the world the title of being the most intelligent community in the world. And before they do that, they prepare a shortlist of 7 locations that compete for that award. And last year, the Sunshine Coast was one of the 7 places in the world that made that shortlist to become potentially the most intelligent community in the world. It didn't win the award, but the fact that they made the shortlist of 7 alongside cities like Chicago in the United States says something about how this once sleepy tourist town is making such an enormous strides to becoming an internationally recognised city. And so as a result of all of that, it's got one of the fastest growing economies anywhere in Australia. It's been growing each year at rates well above the national average. Its population currently 350,000, but soon it will overtake the New South Wales Central Coast to be the 9th largest city in the country. And it's projected to be over 500,000 people within 20 years, which means it'll be bigger than Canberra and Newcastle within 20 years. So it's a city on the move, really going places, creating a lot of jobs, which is massive for real estate markets. I did a report for Sun Central, which is the entity which is building that CBD from the ground up that we mentioned earlier, in October. And at that time, these are some of the price growth rates that were being achieved on the Sunshine Coast. Sunshine Beach, which was probably the most expensive suburb in the region, its median price had grown 37% in 1 year. Twin Waters was up 21%. In the apartment market, Noosa Heads had grown 25%. And those are exceptional growth rates by anyone's standards, but all of this is flowing out of that infrastructure spend. It's bringing new people to the Sunshine Coast to live and work there. Many of them are earning good money in facilities like the $2 billion university hospital, and they're demanding real estate at the top end of the market. And we're starting to see that kind of price growth happening on the Sunshine Coast. And just finally, we're starting to see some of the new developments achieving prices that previously were unheard of on the Sunshine Coast. We'll hear a little bit more about this in a moment, because I just want to point out to you in that graphic, this is Maroochydore. There's a site around about here on the riverfront which is currently being developed by Mosaic, and they're selling off the plan, and their top floor sold for, the apartment on the top floor sold for $6 million. The sub-penthouse for $5.7 million. Those sorts of prices have never been remotely achieved in this area before. And it's just testimony to what's happening on the Sunshine Coast, what it's becoming as a city, as an economy, and what's happening to its real estate market. The new people that are coming in, paying those sorts of prices for top-end real estate. It's a remarkable story, I believe. That's why the report that I wrote for Sun Central was called The Sunshine Coast, the most compelling growth story in Australia. I believe it's true. We research all of Australia with what we do at Hotspotting, and I can't find another location with a story as strong as this anywhere, not in capital city Australia, not in regional Australia. There's some pretty good stories out there, and Chris mentioned Geelong, which we've tracked for a long time, and it's been a fantastic economy and market and will continue to be. But the Sunshine Coast, it's number one by a wide margin as far as we're concerned, as the most dynamic growth story anywhere in the country right now. That's all I have for you.